that format, and if it needs to be adjusted, we'll adjust it. This is a work in progress right now. As I mentioned earlier, at some point, there will be a charge for the room, but we don't know how much, and we don't know when that'll kick in. There's a lot of stuff that has to go on behind the scenes to make sure that it would be a real value, that you get your maximum bang for your buck. But for right now, there's no charge for anything, so don't panic. Invite your friends. All right. Uh, and I really try to give you 110% of what I have in the knowledge that I've gleaned over the years, and hopefully help you guys try to turn some of that into money, because that's what we're here about. It's about making money. All right. Um, so as I said today, I'm going to do a review, and well, thank you for that, Daryl. I really try to put 110% of myself out there. Most people absolutely won't do what I do. Uh, I don't exactly know why, but I can't really concern myself with it. I can only concern myself with what I can do. I love teaching. I have a background in teaching. I believe uh, I'm a natural teacher, and I'm always trying to improve, always. Also, if there are any other people in this chat that are recording these lessons, please touch base with me at my email, tradercoach101@gmail.com, because I would like to put them together. And I'm writing the PDFs for the course, and I'm going to base it on a lot I'm going to base the PDFs on the materials in the videos. And then I will redo the videos in a more professional format. So that would help me help you guys. So if there's someone out there that is recording them, I know Daryl does, but if there's anyone else, please touch base with me and let me know. Okay? The other thing that I want to get to is down the road, we will talk about all the indicators, all the lines and squigglies, and we will have a special week on just custom indicators. And these are the ones that are programmed by a third party to work with the MetaTrader platform. All right, we will definitely go into all of that. One of the reasons that I decided to learn price action and really understand it and really get it under my belt is that my first introduction to Forex was through a company that I won't mention, but they had a software package that put up a bunch of red arrows and green arrows, and they had this big graph with red and green boxes on it, and you sell when it's red, you buy when it's green. Okay. I bought that. They got me for the $5,000. They got me for another $200-300 a month to get the special feed, in order to feed that software package and that nonsense. I went to the different training seminars they had in different parts of the country, and I was sitting next to a guy who I guess was a more experienced trader, and I was trying to learn how this red and green arrow thing worked. And I won't mention names, Daryl, but you're not far off course with that. He questioned me and asked me if I ever used technical analysis, and I had no idea what technical analysis was. And he looked at me like I was like the biggest fool in the world, and I felt really a bit ashamed to having spent all this money that I didn't know that, and I didn't even know what technical analysis was. So to make a long story short, I looked it up on the internet, and then later on I found out that what I had paid $5,000 for was not teaching me how to trade. It was only teaching me how to read those red and green lights. So I still didn't know how to trade. That software was taking the information from the market, churning it around, and giving it to me in the form of red and green lights. So to make a long story short, that company went belly up, and it taught me a big lesson uh, in that I needed to learn how to trade successfully and consistently with the most basic of indicators with the most common of tools. So if a broker does something bizarre, if a platform crashes, if for whatever reason I have to move to another entity to trade, it will not affect my bottom line. I'm not dependent on a super duper whiz bang indicator that only works on MT4. Did you understand what I'm saying? I do have a couple of indicators that I particularly like, but if MT4 goes belly up, then I'm screwed. I can't use my special indicator on NinjaTrader or whatever unless I get, another programmer involved. Now, part of the reason that I'm going into that is that MT4 is going through a massive change in how they handle their indicators, experts, how their programming is handled. And there are a great many people having a real tough time because they're turning on their platforms over the last couple of days, and many of the tools that they were accustomed to having are not working. And this is the exact kind of thing that I wanted to protect myself from by learning how to trade with tools that every single broker in the world has. I don't know of a single broker, not a single one, that can't give me a candlestick chart and a tool to draw a straight line or a trend line. You follow me? So I could go to almost any broker in the world. As long as they can give me a candlestick chart and I can draw straight lines, I can make money. And that's why I really harp on truly understanding price action. And once you understand price action, you have the odds are much higher up for you to, Richie, that's good. Yeah, there's some people that had no issues, but there's some people that are having massive issues, especially with some of their special indicators, their custom indicators. Okay, I for one use Renko bars in one of my trading methods on a pound yen chart, and I can scalp the shit out of it with it. My Renko bars no longer work, and they will not work until my broker upgrades to version 600. Okay, so what I do in the meantime, I go to my manual scalping method that I use. So it doesn't really affect me because I can create something. I have created something for that eventuality. Okay, so the goal here is to put you in a position where you can go and trade anything. Okay, using the same stuff that we're talking about. All right, but that's good for you, Richie. Excellent. But as I said, I know a great number of people that many of their custom indicators have not worked on the upgrade to 600. So we'll see. And MT4 went through 3 upgrades very quickly. They went from 509 to 574, and then to 583, and then to 600. So perhaps when my live broker updates, I have several live accounts, but perhaps when they upgrade to 600, my indicators will work again. Well, yeah, Richie, I'm going to get off topic here just for a minute for the people in the room. MT5 was supposed to be the real super improvement to the MetaTrader platform. It appears that MT5 had more quirks and bugs and disappointments than they were ready for. And it wasn't catching on the way they wanted it to catch on for a whole host of reasons. So what I believe they're doing is they are abandoning MT5. And what they're doing is they're taking the best of MT5 and trying to combine the best of what they discovered and bundle it into an upgraded MT4. So that's my take on what has happened with MT5, because I've heard of very, very few people trading live anywhere with MT5. All right. And then there were different issues with programming and all that sort of thing. Okay. I guarantee you there's a 602 coming, Tony, because what they're doing is the Microsoft, they're using the Microsoft technique, I call it. They throw it out there. They've got so many customers using MT4 that in a week or so, they'll get error messages and all the complaints, and then they can rush to fix them. And that's really the only way to do it. It's unfortunately not the most efficient, but it's the way that seems to work generally. They just throw it out there, and once they get the complaints, they fix the complaints. So I'm expecting a 6.2, a 6.10, a 6.24 down the road. Going back to our chart, this is our CAD, dollar CAD 1 hour. You see we're approaching the top resistance line here. All right. So now here, this would come into play. Here we could make a decision. If we reach this top line, we can make a decision as to how we want to handle it. All right. We have clearly bounced off the bottom. And in this 1 hour, and this is obviously is a news candle because it started at 8:30. Phil 919, TradeStation is free for Forex account holders, no minimums, I believe. AC money is in, I'm assuming you're saying account money is in USA though? Oh, okay. Well, keep in mind, TradeStation just bought, and when I say just, I think sometime in 2013, TradeStation bought Interbank FX. All right, so that's kind of where they want to put their footprint in the Forex market. All right, and TradeStation has their own particular platform outside of MetaTrader 4. I haven't experimented with it yet because there are just so many hours in a day, and I have a lot to do. Okay, so that's my take on that. And I'm just watching for you guys as you're typing. All right. So that's why I really stress price action, because you can go anywhere, you could trade anything. I don't want to lose this chart because I want to watch it, but I just want to show you. Let's look at the S&P. Oops, I don't want to do that. Chart window. Okay, this is the S&P 500 for those in the States and for those outside of the States that are familiar with it. Let me open this up. Let's turn it into candles. Let's get rid of the grid. Okay, this is the S&P 500. And as you can see, a lot of what we talked about, pretty much everything that we talked about is in here. All right, from yesterday's lesson, you can see that we've got this sideways thingy going on. And don't everybody yell if I don't draw the trend line exactly perfectly to fit your needs. I just want to make some examples. This is that sideways consolidating market made up of triangular moves. And I think you can see the triangles, but I'll draw a couple just, so you could understand. All right, we talked about that yesterday for Forex, but you see the same thing works with the S&P 500 or any stock. Okay, we have our downtrend here. Okay, where we have our push down, a big pullback, another push down, a pullback, and there's the third push down right here, as we mentioned. All right, here's push number one. Copy this down here, and this would be push number two, and copy this again, and this would be push number three. And as you can see, they were similar in size. Okay, so the things that we talked about work on anything that can give you candlestick charts. You can put these to use. All right, and then when you add your indicators or your favorite method for getting in and out of trades, you can really, really dramatically improve your bottom line. Okay, we look at the push down. We have a 1 candle pause here, so we can, say 1, 2, 3, 4 candles down, then the pullback. Okay, and then we have 1, 2, 3, 4, 5, 6 candles down, and then the pullback. See that? I did not count this candle because this low was lower than this one. I know I'm going to get a question about it. Okay, that means we're still continuing in this trend. Okay, 1, 2, 3, 4, 5, 6. So here we have 8 candles down. But once we get our pullback, we're off to the races again. So it's the same premise, the same thing, the same counting, the same setups. Okay, and keep in mind, we're thinking Picasso. We're not going to get every candle lined up absolutely perfectly, you know. Um, okay, Mike, I mentioned earlier, I'm just showing you briefly, okay, that the same premise is there. You're picking out a specific thing, and I'm not sure what you're talking about. Um, okay, I'm just trying to look. Does everybody understand what I was showing you? I think Mike is picking something. I may have missed one candle or something like that. And I'm just trying to show you just generalities, just generally what's going on. Okay, I'm waiting for Mike to type. Okay, yes, where it has a higher low. That doesn't tell me anything, Mike. There's higher lows all over the chart. Um, so you're saying that there was a pullback after just two candles down. Yeah, that's definitely a possibility. Maybe it's this one you're talking about, Mike. And I'm just showing you in general that this was the major thrust and here was a major pullback. Yeah, I understand. I told you if I miss something, don't get your brain twisted. I'm just showing you generalities right now, just to show you that generally everything we learned can be applied to any instrument that you're trading. Do you understand that, Mike? Okay, okay, sorta. Okay, I'm not going to get too wrapped up in that at the moment, Mike, because there's some other things that I need to get to. But the fact that, and this is what's interesting, Mike, and this is maybe going right over your head. The fact that you spotted it tells me that you learned it. Keep that in mind. The fact that you spotted that I missed a pullback somewhere in a quick explanation tells me that you learned finally how to spot a pullback. Embrace the fact that you can see it now and you couldn't see it a week ago. You get me? It is correct, Mike. I didn't do anything incorrect. I just tried to be very general so I could move on to the other thing. Yeah, I know, Mike, because we've worked together for many, many hours. I understand that there's some concepts you have a problem seeing, and I get that. Okay, and you see, you look for everyone exactly, and I get that also, Mike. But remember, we're talking about a market that is not always going to move perfectly to fit exactly what you want it to do. We have to think with a bit more. We have to look at the chart with a bit more of a creative eye. Okay. Any just general questions on what we covered so far? Um, Let me see. We have Helen, Hot Curry, Daryl, Jem, Rishu, B, Aptera. Aptera, where are you from? That's an interesting name. I don't know what that represents. Oslo. Okay, interesting. Yeah, Mike, you know the rules already. The fact that you pointed out that I missed a pullback tells me that you can see the pullbacks. I wasn't trying to count every little candle perfectly. I was trying to show something in general. So if you see it, and you also should know how to trade it. I shouldn't have to tell you how to trade that pullback. Do you understand what I'm saying? Okay. Okay, Mike. Sometimes we skip over and others we don't. No, I don't skip over anything, Mike. If I tell you I'm going to do something in general, it means I'm not going to get into the super details because we've covered the super details already. You follow me? Once we've covered the minutia, once we've covered the DNA of it, then I can be a bit more general just to explain a new concept, and I won't get into every single candle. So the fact that you spotted this pullback, and this is the one I think he's talking about, right, Mike? The fact that you spotted it tells me that you learned the lesson. Yeah, so there's nothing to get confused about. As I said, if you hear me say I'm going to talk about things in a general form, understand I'm just going to go through a concept, and then I explain the details. Okay? This was tradable. This was a nice trade. There was good money in this trade. There was good money in this trade also. Okay? So I understand what you're getting at, Mike. Now I do want to move on a bit. All right, let me just get rid of this chart. And here we are. Now, what we talked about yesterday were the types of consolidation. We talked about price traps, and we talked about wedges. And there are different types of wedges or triangles. There's the ascending triangle. Let me just look on a spot. Let me just see if I can find one quickly here. Okay, this is not a great one, but this is a wedge here. Okay, you see that? And I could bring this down just a hair. This is a form of consolidation. Generally, these happen after a strong move in one direction. The market consolidates, it takes a break, it tries to figure out where the next move is. All right, that's a descending triangle. Let me look for an ascending triangle. And I want to pick some relatively simple ones to look at. This you could consider an ascending triangle here. And you see I've got all these highs right here. See, I've got this high, this, and this as my top. And it's called ascending because the bottoms are getting successively higher. Okay? And remember, it's location, location, location. It's where these things happen on the chart that give it its power. Every triangle isn't tradable. Every price trap isn't tradable. All right? Let's go into a price trap now. Here is a price trap. And a valid price trap needs how many candles, everybody, in order to be a tradable setup? Okay, well, Mike got it right. So you are learning, Mike. Tony has it right. He explained it a little bit different. Sean, it's not 4 candles. Brishu, it's not 2 candles. Mike got it correct. Mike has it correct. He said 3. Tony has it correct. He said 2 plus 1. Gene, almost. It's not 2 to 3. Okay, you don't. There's no subjectivity in this. I try to cut all the subjectivity out, so you can use your mind to kind of look at some other issues. Tony's saying a master and 2 slaves. Yes, that's correct. Gene is saying 3. Calzone is saying 7 to 4. I have no idea, Calzone, what you mean, but it's not 7 to 4. Okay. A valid 7 minus 3. I have. I don't know where you got those numbers, Calzone. Okay. Let's go over it again briefly. A valid price trap needs 3 candles. Let's use this one up here. A valid price trap needs 3 candles. You need this first candle, okay? And in this case, it will be this white candle. And then you need 2 candles after it that cannot close above that first candle and cannot close below the low of the first candle. And the crucial word here is close. This candle could have made a wick all the way down here and yet come all the way back up and still closed inside this box. I mean, inside this candle. Do you follow me? So you need the 3 candles to work in unison. Once you have those 3 candles in working together, you can then consider that a trap. And as we mentioned before, It's about location, location, location. These price traps, if the now in the case of a going short, the top of this price trap, if it stops at a logical place on the chart, then that gives it more power. So if I mark the high of this price trap and I go back to the past, you see right here, we have an old area where price bounced 3 times and collapsed from that area. So now we're creating a price trap at that same price point. I have a high probability trade here that it's going to collapse from this area as it did in the past. The last time we hit this 3 times, it collapsed. We've hit it now 3 times. I'm expecting this to collapse. All right? Do you follow me on that? Are there any, questions? We need the 3 candles to be in unison. They all have to work together to make a valid price trap. You need 3. You need the initial candle followed by 2 candles that cannot close above the high and cannot close below the low. And again, as always, I want to thank everybody in the room for allowing me to go back and go over this again. Sometimes it takes things to, sometimes people need to see things 2 or 3 times. So, bear with me with that. And I try to really give everyone proper time if they have a question. I don't like to leave anybody out in the desert with no water, if you understand what I mean. If you ever come across a concept or anything that I'm teaching and you don't understand it, stop me right there and make sure you get that answered. Oh, hi, Shirley. Okay, you were out of town and missed a lot. Okay. Well, there's a new recording up. And I'll post the link a little bit later. Okay. So remember, it's location, 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 where these happen. Let's look at another price trap. Thank you, Daryl. Tony, in this case, does the previous price trap collapse give you an idea that it will collapse again? Or you simply know it's going to either go up or down and you don't care? That is, would you have a bias on the short side for this instance? Okay. Tony, I cannot ever, under any circumstances, tell you where the next tick is going to go. I simply do not know. All right, so let's start there. So I never have a guarantee as to which way it's going to go. I look for what is repeatable. Remember, my definition of price action is the natural movement of the market made up of consistent, repeatable patterns. This price trap is a repeatable pattern. It is a consistent pattern. Look at this price trap down here. This guy. Okay? See that? That candle right there, the next 2 could not break the high or low. That's consistent and repeatable. Let's look at this price trap down here. You see that candle? The next 2 could not close above the high or low. It's consistent and repeatable. Okay? What I look for then is it happening at a spot on the chart that would make some sense? In this case, this price trap, when I look at this, if I go back to the past and I put a line at this bottom, I can see I've got resistance here, here, and here. Nothing closed below this line, so this is now the floor. Here, and then I've got this whole bundle of candles that kind of congested right in here. So this looks like it's bouncing off the floor right now. So in this case, my bias might be long. You follow me? So once you look back at the price trap, and again, we haven't gone into support and resistance yet. That's going to be for next week. So, next week is going to be the 4 kinds of support and resistance, and we're going to go into the specific design of candles and what each individual candle tells, what story it tells. Okay? And again, when I do that, I'm very specific about certain things because I really want to get, most of the subjectivity out of trading. Phil919 is saying, is the most important part of is the most important part of the price trap its location with respect to previous support, to previous PA and SNR, candle action price trap being a bonus. Yes, it is a bonus, yes. And it's a form of confirmation. And also there are a couple of indicators that you combine with this that really kick up your probability and your hit rate. Okay, but the indicators are way down the road yet. I want to make sure that we cover this stuff here. Okay, so you're correct. It's extra information when you look back to the past and you see something. Like over here, you see this small price trap here? My extra information is this pin bar here. You see that? I'm going to get a little advanced, but I'm not going to talk about specific indicators right now, Phil. You see this pin bar? And what I want you to notice is that at this price point, let me put a line here. At this price point, you have 1, 2, 3, 4 candles that could not close below this level. And here we came back and hit the level again. The last 4 times we hit it, it created a move up and actually created a move all the way up here, 35 pip move. And here we are, we've come back, we've hit the same level, and we've made a price trap. Do you see how that extra confirmation comes into play? And when we get into how candles are constructed, I'll reiterate and explain why these closing prices are more powerful than these wicks when you're looking for support and resistance areas. Okay? So you see that. You see, and all 3 of these would have been winners in the direction the chart told us to move. Now see this chart here we have almost a pin bar. Pretty good. But here we have three hits at this price that couldn't get below it. That's a big clue. And now we've come back again. We hit it twice with more wicks. Okay, so this would be telling me long. This is telling me long. This is telling me short. And the market does not lie. Okay, it never moves in the wrong direction, ever. All right. When you look at this price trap right here, and as I said, every price trap is not tradable. When I look at this one, okay, and I go back to the past, if I put a line here in the past to look at this top, I've really got nothing back here. This came close, but no cigar. I've got nothing back in the recent past to tell me that this would be something I might want to jump on. See that? All right, so you know, you won't take, I want proof. I want clear proof. I don't want subjectivity. I don't want maybe. I want to see this kind of stuff where absolutely, positively, without a doubt, did not close below this point, and all of these wicks confirm it. That's something you can see with your own 2 eyes. They can't take it from you. They can't fool you. That's the type of thing that I look for. Okay, making money is a very, very hard thing to do. I used to have to work with my hands. And trust me, to make 10 grand busting your ass with your hands is no fun. All right, so I'm very determined to get this to you the right way, so you don't have to go through any struggles. All right, so that's the concept of a price trap. Okay, here's another one here. Here's our main candle, and you know, look how high this wick went. But when it closed, it was right back underneath this high. So let me draw this here. Does everyone see this? You see that? Look how far this wick went. This wick went all the way down here, but look at where it stopped. Right there. And my evidence for this bottom is 1, 2, 3 candles here that could not break this level. You see that? And I've got 4 candles here that could not break the level. So I know that when I come back to this level, this is a pretty good opportunity for me to take a long trade here. Okay, does everyone see that? I'm looking for clear evidence. I don't want to be scratching my head. And look how far this pin bar went. Well, that's almost a pin bar. But look, it came all the way back underneath this level. So this level was really, really powerful. You see that? Right now, it's the floor. It bounced off the floor and went up. It came back, bounced off the floor and went up. We finally broke the level right here. Then price went down, came back to the level, and now it's the ceiling. And I'm getting a little bit into support and resistance right now. But like I said, we'll go into that later next week. Gene, you probably missed one of the other lessons. On these boxes, when they break out, our profit target is usually twice the width of, oops, wrong tool. Our profit target is usually twice the width of the box. Okay? And what I do is I stack two of these on top of each other. So that's twice the width of this box. My stop loss is going to be the back of the box once we break out of the box. All right? You see that? And my primary thinking here is long, and usually I like to see a close outside of the box, which would be here. So if I take these two and stack them on top of each other here, you'll see that it moved a hell of a distance, but we did make our profit target. And I usually cheat in a little bit off the top. All right, you see that, Gene? Does everyone see that? Are there any questions just on this concept? Okay, Phil, I'm waiting for Phil is typing something. Okay, great. Brishu, Daryl S, George, Helen, Aptera. Let me know. Jose, Ken, Kimberly, Chris, Medina. Good morning, Medina. How are you? Mike, if you're understanding this, okay. After the close of the big candle, I added 2 lengths. Yes, I did, Osmar. Okay. Now, because my entry would be here on this particular case on a 1-hour chart, I'm looking at a 30 pip stop. Okay, which is not an enormous stop. But on a 30 pip stop, I'd usually be looking for a 60 pip take profit. And this particular trade happened to give me that. Okay, because I'm looking for twice the box. You got me? But on most of my trades, I'm usually looking for 2-to-1 risk reward ratio also. So you could have played this either way. You could enter here and go for twice, your risk. So if you're risking 30, you want to shoot for 60, or you can take double the box and take that. So in this case, you'd be risking 60 pips for about a 35 pip profit. I don't like those odds. Okay? So again, the tool that I use to help save me some money is a sniper setup. Now, Hot Curry is saying, wouldn't it be better to get in at pullback when you have a big breakout candle? Yes, but we don't know when or where the pullback would start. So were you here yesterday? Do you know how to identify a pullback, Hot Curry? In an uptrend, how do we define a pullback? And I'm asking Hot Curry specifically. And Hot Curry is typing. So I just want to make sure she understands how we in this particular room define a pullback. Now, once you go back into your other rooms and all that, yeah, they may have completely different ways of going about it. But in this room, the way Uncle Lou does it, we have a very specific. And I like to work in specifics because it takes this head scratching out of the game. The candle that breaks the trend. Okay, could someone else type in how we spot a pullback? I just want to see who knows how we define a pullback. Okay, yeah, Terry. Terry has it and Ron has it. You kind of got it backwards or turned upside down, Mike, but I think you got it. Brishu has it right. What we define as a pullback, Terry, or the beginning of a pullback, is in this case we're in an uptrend, and you see that these wicks keep getting longer. Oh, they get higher than the prior wick. You see that? Right here is the first time in these four candles that we had a wick that was lower than the prior wick. And it's at this point we want to put a trend line right there. Okay, so yes, I understand what you're saying, that you want to enter on a pullback. Okay, so you said you knew what it was, but you couldn't phrase it properly. Okay, Hot Curry. Now, how do you know when the pullback is over? That's the next thing. And I'm asking Hot Curry at the moment. And thank you guys for your answers. That was very good. And I see everybody's pretty much got the idea. And you understand how being specific about things, yeah, when the trend break, yeah, trend line break, yes, okay. So yeah, you could enter there. In this case, it doesn't save you very much because the pullback ended right about there. You follow me? So you're actually entering at a higher price than you would if you had entered at the open. All right? So yes, that is another strategy where you could enter on the pullback. All right, and we will talk about that when we get into how candles are constructed. We'll talk about that because there's a couple of things that the old school stock traders did that were pretty cool. What about the wick of the breakout candle? I'm assuming you're calling this the breakout candle, Hot Curry? Yeah, you're saying what about the wick of the breakout? This is the wick of the breakout candle. So what are you saying? One tick above that high? Are you saying we should enter one tick above the high? The wick on the next candle. So you're saying we should enter on somewhere in this lower wick. Am I correct? Hot Curry, somewhere in this lower wick? Yeah, okay, but where? How do we determine where? Because we don't know how long this wick is going to go. And I'm just curious to see what her response is. And Hot Curry is saying yes, pullback. Okay, so she's saying maybe go to a 5-minute chart. Yeah, I was going to touch on that. Hot Curry. All right. So, and I mentioned earlier, the tool I have to save myself some risk is to go take this same box and I just go down to a lower time frame. How far back are we? I hope we can find this. We might, oh, wait, let's see what happened here. And this is that same dollar CAD. Now we've hit this top line here. Okay. So you see this triangle played out. All right. I can move this over here now. Everybody understand that? Everyone see that? The triangle played out. Now we are looking for a short. Hacker is saying I am a guy. I don't know if I said something to indicate you were a girl. I'm not sure. Okay. Oh, I did. Okay, okay. And I know why. There's somebody in another chat that has a very similar name that happens to be a girl. Okay. So you see we've hit this top line. Now we can make a decision as to whether or not we want to go short here. You follow me? Now, until we get into oscillators and other indicators, let's look at this from a manual point of view. So to play this short, now this goes back to my other question. If you just turn this chart on right now and you see this, the number one question you ask yourself is where am I in the overall scheme of price action? What building block? Okay. then the next thing you ask yourself is, what do I need to see to take a long trade, and what do I need to see to take a short trade? So in this particular case, what I need to see to take a long trade would, I need to see a couple of candles go up, and this is only 2 candles, so maybe I need to see 1 or 2 more, and I need to see a pullback. Okay, not necessarily to this line, because this was a news event, so this candle could go as far as this one did. But for me to go long, I'd need to see price go up and close above this line. And remember, we talked about, for me, the closing price is the key. To go long, I need to see a candle close above this line, make a legitimate pullback. I need to see a legitimate, real pullback candle, and then I would look at taking a long trade. Do you follow me on that, guys? When you look at a chart, you should have a game plan for a long trade and a game plan for a short trade. You should not be scratching your head thinking, I don't know what to do. Okay, yeah, Gene, you could look for a trap also if that develops. Yes, and the trap would develop after a pullback candle. If the pullback candles, continue to make higher highs, you don't have a trap, if you get what I mean. But if the pullback candle makes a price trap, then at that point, my bias on that price trap would be long. Okay, now to go short over here, what would I need to see? Okay, now there are a number of ways to do this to go short, but I'm only going to stick with what we learned. Okay, to go short, if you wanted to play safe, I would want to see a bounce off this trend line. Wrong tool. A legitimate pullback candle. Drawing this the wrong way. I did this the wrong way. Give me a sec. But you understand the thinking. You have to have a game plan both ways. And if you notice, I mentioned that this candle could go a mile high, but look, it came back under this line. It closed under this line. So in this case, I might be looking for something like this. Price to move down a little bit, maybe give a legitimate pullback candle, and then go short. But you see, I've got a game plan. I'm not guessing. If I don't see what I want, the market will not get my money. The market has to move the way I need to see it. If it doesn't, then the market is saying, sorry, Lou, this ain't your day today for that trade. And I can accept that. But my contention is to not be in the dark. Okay, does everybody understand that? And this, I'm glad this happened in real time. Now, the aggressive, let's talk about the 3 entries on this, since this is a live situation here. The aggressive entry would be a touch. The minute I touch this line at this price, I'm in. That's super aggressive. And then what you do, your stop loss in this case would be at the highest high of any candle wick that pierced that line, and that's over here, and it's about 6 pips. Okay? So I'm going to add 3 for the spread, which would make it 9. Let's call it a 10 pip stop. Aggressive, you would enter right here with a 10 pip stop, and your target is 60 pips to the bottom. So you're looking at 6-to-1 risk reward ratio. Okay, that's the aggressive entry. The moderate entry would be, once this, now you see this candle is making a bit of a pin bar, but it's not over. It's a 1-hour candle. We have a long way to go. This candle could close considerably short. The moderate entry would be, if this were a closed candle, keep that in mind. If this were a closed candle, the moderate entry would be to enter 1 tick below that low, if that was a closed candle. Okay? The conservative entry would be to let this candle close, see if we get maybe a 1 candle pullback, see if we get a legitimate pullback candle somewhere, and then enter after that pullback, which would be this case. Let me get rid of some of these. But do you see that? There are 3 ways to, one that took the aggressive entry would actually be up 20 pips right now. You see that? If you took the aggressive entry, you'd be up 20 pips, or 19 pips, I should say. And remember, the aggressive entry is the minute I touch this line and I put my stop out at the highest high of a candle wick that pierced it. Hot Curry saying, so you like pullback and retest? In certain situations, yes. Hot Curry. When it's in line with the natural movement of the market. Okay, Hot Curry said, then price comes back to the direction of your bias. Trying to understand that. Well, basically what I'm looking at is for a setup that I have traded, and this is my rule. When I'm learning a new indicator or learning a new setup, I have to trade it for 100 trades. And then I can see what the average risk reward is. I can catch all the little bugs in it. I can catch the nuances and all that other stuff. You know what I'm saying? So when I mention these things, these are things that I've traded over and over and over and over and over and over and over. All right. Now, Gene was saying, is this risky? Is that not very risky? Gene, you got to clean that up. Is what not very risky, Gene? Gene is asking me, is this not very risky? And I don't know which he's speaking of. What are you saying, Gene, that's not very risky? Which are the entries?
Luke, can you hear me?
Yes, I can, Gene.
Luke, can you hear me? Okay.
Yes, I can.
You said if you traded all the way back, okay, if you said if you traded all the way on top here, you would gain another 10, 15 pips and total 60 exactly. Would that not be extremely risky as opposed to waiting until it got to the bottom of the doji over here?
Well, as I said, Gene, there are 3 entries to any trade. There's the aggressive entry. An aggressive entry is always going to have more initial risk. And this is the aggressive entry. The minute it touches that line, bam, I'm in. I'm not waiting for shit. I'm in. I'm in right now. That's aggressive.
You would have put it in there.
An aggressive trader would have put it in there. And there are times when I take aggressive trades, but that's when I have all the right evidence set up for me. Do you understand what I'm saying? All right.
Yeah, I do. I just it just caused me a little bit of a challenge to be able to place the trades, so high up. I would have waited when it got down a little further. But
well, that's you. There's the aggressive entry, as I said. There's the moderate entry where you wait, for this a little bit of a pullback. That's moderate. That's a bit more traditional. Right. And then you have the very conservative entry where you give up these 20 pips. You get me? And you enter right at this low. You see, you give these 20 pips up and you enter right here. When we get one tick below that low, then you can enter. But now your take profit is only going to be like 40 pips. But your risk is still around 10 or 20 pips. You got me? So you're still way better than 1-to-1 risk reward ratio. And that's where you want to be. You always want to be better than 1-to-1.
Yes, sir.
Okay?
Yes, sir. Out of the mic.
Let me get rid of this line. Yeah, you can leave off that sort of thing. Please mute your mic. Or kill the bird, one of the two. Now, I just want to see where we were here. Okay, we were back here helping Hot Curry understand this concept, this trend line. All right? And how it plays in. Now, what I wanted to do, I'm going to get back on track here, is I want to set up a sniper right here. Okay? My bias is long. I'm thinking long. But I need to see a close above this line. That's crucial. A candle wick is not going to trick me in this case. What's considered aggressive evidence for an aggressive entry? Hot Curry is asking me, what do I consider aggressive, or what do I consider evidence for an aggressive entry? An aggressive entry relies on the least amount of evidence. Okay? It relies on one key factor that you choose. That's what an aggressive entry relies on. A moderate entry relies on some of the more traditional things you look for, like pullback, support and resistance, that kind of thing. A conservative entry is when you want 3 or more things to all work in conjunction to create your entry. So if you're a bit of a gunslinger, or if you're a bit of a risk taker, then you'll enter the trade with the least amount of evidence. Okay? Okay, I'm glad you guys got it. So once I have my price trap drawn in here, I can now go down to a lower time frame. And remember, both of these candles, these 2 candles have already done their business. So this candle wick would not have faked me. You got me? Because I don't draw the price trap until I get 2 candles that can't close above this high or below this low. Once that's in place, let me clean up some of these lines. I got to draw the box again. Okay, that's okay. Once I draw this box, what I can now do is I'm going to go down. I'm going to mark my top here. I can now go down to, let's say, a 5-minute chart. And let's see if we can find this box. I hope that we have enough data here. I don't know how far back that box was. That's the one quirk in doing it this way. Come on. You know, I didn't look at the date on that box. Where were we? 1 hour time frame? Okay, so here's the box, and what's the date here? It's January 14, and that was a 1 hour chart. So let's see if we can get back to January 14 on the 5-minute chart. All right, I'm just going to have to really work this mouse here. There we go. Okay, so remember, this wick is that one candle wick, you know, from the first candle. You follow what I'm saying? So now in this case here, I could enter here. Okay, and put my stop down at the bottom of this candle in the middle of the box. Everyone see that? I'm no longer entering way up here. On the 1 hour chart, my entry would have been all the way up here. Brishu said daily. Maybe we were on a daily chart. Oh, it was an H1. Okay, so we went from an H1 to an M5. Now, the width of the box doesn't change. We still have that 14 pip width as a stop loss, but we get into the trade at a better price. You follow me? I'd rather get in down here than way up here. Do you follow that? And to go into Hot Curry's concept, Hot Curry could have waited for this pullback, okay, and then taken the long trade. Or if we look at our pullback method, let me open this up a little bit. Here we have this is higher, this is higher, this is higher, this is higher. Right here we have a lower high. We could use the pullback method that we already know. Look for a legitimate pullback candle, which is right there. And then we can wait for a break of that line and put our stop down here now. So now we're still looking at a 30 pip to 60 pip move, but we're only using a 10 pip stop. You see that? Where we saved ourselves some risk. And that's one way to use a sniper on those price traps. Okay, Richie is typing a question. Let me squeeze this in a little bit. And again, if you don't have a method for entering a trade that you really like, that has proven to be successful for you, then you could use the same pullback method on the 5-minute chart. Okay, until you develop one. Do you get it on the first pullback or the third? I don't know what you mean by the first pullback or the third, and I'm going to mark this. This is pullback 1, and this is pullback 2, is what I'm gathering. Is that what we're getting at? I think he got in on the 4th. On the 4th, what, Hot Curry? What 4th candle? Okay, I see a lot of text coming in very quickly. Yeah, Jay, I did explain why I thought it was going up, but I'll go back to that. And Hot Curry I'm a little confused about your question, Hot Curry. You're saying I should enter on the 3rd or 4th candle, but in relation to what? And I want to make sure that I get this correct for you guys. And Jay, I will go back and explain why I thought it was going up. I believe you got in at the 4th candle of the trend line break. So this is the trend line break here, this candle. 1, 2, 3, 4. This is the 4th candle you're speaking of? And Richie's saying, Richie, do you have a microphone? Or Hot Curry, do you have a microphone? I want to make sure I get this answered for you guys.
Can you hear me, Lou?
Yes, I can. Who's speaking?
It's Richie.
Okay, Richie. What is it that you want to ask?
Okay. Well, you have you have the first candle that went lower. Okay.
That's
And
this
then,
one. Wait.
yeah,
Let's break this down, because I want everyone to understand this. This is the first candle with a lower high.
okay.
That's what you're speaking of, Richie?
Yeah. So do you put the horizontal line on the top of that candle, or you wait? What happens
Oh, you can.
when it
Yes, you
goes?
can. You can put a horizontal line on the top of this candle, okay?
And then
Or
it's
you
gonna
can put a
be.
horizontal line on the top of this candle, because remember, at no point we don't get a break here until right here. So then you can put a horizontal line 1 tick above that high.
Okay.
Okay,
So
I was going to get into the types of entries, but when you started to ask the question, I didn't understand what you meant.
I'm
And
not
as I
sure.
said, all trades have 3 entries.
I'm not sure which candle I would put the entry on. So if you can explain that again.
Okay. Once we have this lower high and we drop our trend line, what we're looking for is for price to start trading above this trend line. Okay, when this candle finished, it left a wick here. We can put our entry 1 tick above that wick. You follow what I'm saying? With our stop loss down here. That's one way of entering. The other way of entering would be the aggressive, and that would be when this candle closed on the other side of the trend line. And let me open this up, because remember, the trend line won't change. When this candle closed, it closed looking exactly like this. The aggressive entry is right there, 1 tick above the top of the close of this candle. So you would enter right here at the open of this next candle. You follow me? That's aggressive. That's the least amount of evidence. Okay? The moderate entry would be a tick above the high of this candle. That's the moderate entry. All right? You follow what I'm saying? And then the most conservative entry would be to enter 1 tick above the high of this, because now you want price to prove that it's going to make a new higher market, because it has to get above this high in order to keep the uptrend going. So this would be the most conservative. This would be a moderately conservative entry. Okay? This would be a moderate entry above this high. This would be the aggressive entry. And again, I'm not trying to change anything in your style that you like. I'm just showing you where to place your trades to get the highest probability of being in the right direction. And if you don't have a method that works for you, I know for sure these methods will work once you practice with them enough.
Hey, Lou?
Okay? So remember, every trade has 3 entries. An aggressive entry that you're looking for the least amount of information. A moderate entry where you're looking for 2 factors to kind of blend together. And then you're looking for the very conservative entry where you get, 3 or more factors working together. Are there any questions in that regard?
Lou, yeah, I have a question.
And who's speaking? Is this Rich?
Yeah, Richie.
Yeah.
Can you just put your mouse on that spinning top there?
This one.
Next one. Yeah, that one. Okay. Okay. You get in 1 pip above that. Okay, on the top of that, but then it goes down.
Yes.
So do you move your get in to the next down one, and then after that it goes down again? Do you move your get in at that down as well?
No. You can, if you want, you could chase it with a limit order. That's another strategy that you could do, but that'll go into the trade management.
Okay.
Because there's a way you do this with stops and with limit entries. I have a friend that trades the peso, which I don't understand, with like a 200 pip spread while